Okay, so you are welcome back. We want to look at manufacturing accounts. Manufacturing accounts. Let me put in the pencil. All right. So in last semester, you learned classification of businesses according to the activities that they do. All right. I think the pen is holding it. Also holding this. Okay. So by activity, we realize that some of the companies are into manufacturing. Some of them are merchandising, or let me call say trading. And lastly, we also learned service. So what we did was that we've actually gone through this and learned how to prepare final accounts for this one. Now we are looking at a business that is manufacturing and at the same time doing merchandising. All right. So they are doing the two. Okay. So it makes the account divided into two. So we have the manufacturing part and we have the trading part. So we'll be looking at a manufacturing and a manufacturing entity. First of all, so the manufacturing entity, so this is kind of a retail, right? So take note of that. Retailing. Now, retailing means that they take the goods that are being manufactured, then they sell it. That's why we call it retailing. Retailing. Like they are doing it again. So they take this from the manufacturing aspect, then they sell. So therefore, what you must understand is that when we talk about the manufacturing aspect of the business, the purpose of the manufacturing account, therefore, is to ascertain the production cost. So that is what we need. Production cost. All right. So the reason why you'll be doing the manufacturing account is actually to ascertain the production cost. Now, because we are looking at production cost, we'll be preparing a manufacturing account to prepare the production cost. It takes you back to what you've been doing in costing or cost accounting. Because for manufacturing account or for production, we need to do the division of cost. What makes cost? What can we put together to produce something? The cost of things that we put together to produce something. All right. So the procedure for you to go through is to do the classification of cost. Classification of cost. Now, in production cost, finding production cost, you need the direct materials. So we are classifying costs into direct and what? Indirect. The way they behave with the level of production. All right. Behavior. The way they behave with the level of production. So you will find direct materials. All right. Then you will need the direct labor. When we say direct, it means it can be traced to the level of production. It can be traced to production, directly traced to production. So you will need the labor, direct labor. Then you will need direct expenses. All right. Now, these three directs, they are called prime cost. So if you are asked what is a prime cost, you just say it is the combination of direct material, direct labor, and what? Direct expenses. All right. Once you're able to get your prime cost, so let me just say this is prime cost. All right. The total of it. Okay, I think you've gotten the picture. The total of it is called the prime cost. Now, then you add your overheads, or what we call the indirect. Okay. So we call it indirect expenses or indirect cost. All right. Now, the indirect cost, another name for indirect is overheads. All right. It's overheads. So the indirect manufacturing cost, let me bring this here. Indirect manufacturing cost. What we call the overheads, by manufacturing overheads, can also be classified indirect. It can be indirect material. It can be indirect labor. So they are all doing the production. It's just that one is directly to the production, what is going on in the factory. The other one is indirect. All right. Then we have indirect expenses. I said when you put these things together, what was the name? You remember? All right. Manufacturing overheads. All right. So you have your overheads. Now, when you put the overheads and the prime costs here together, you have what we call production costs. All right. So remember what we said we were looking for? We were looking for production cost. Production cost. All right. So that is that. And this thing is very, very important. So you will need to understand it. I mean, as you have seen it. All right. So that is it. So we want to get the production cost, but there may be other costs that we will have to add. All right. So certain costs like administrative expenses. They are also overheads, just that they are not manufacturing. All right. Administrative expenses of the manufacturing. Then we have selling and distribution. Then we have something like finance charges. Finance charges are the bank interest, okay? Okay, so include the bank interest. All right. And when we talk of the administrative expenses, we are talking about the um, accounting department salary. So, all right. So administrative expense, salaries of the secretary. All right. Not those who are in the factory. Get it right. Not those who are in the factory. All right. So basically, that is that. Even depreciation. Okay. So all these things are part of it. The selling one takes examples like commission that you pay to those people who will be selling the thing and will be doing delivery for you. All right. So basically, that is that. Now, when you add these ones, these are expenses standing on their own. So when you add this one, production cost, to these expenses, when you add them, you'll be getting the total cost. All right. The total cost. All right. So that is that. So what we need to do now is to go straight and draw the format of your manufacturing account so that when you get a question, you know what to do and arrange it. And there you go. All right. So quickly, let's look at how the format of a manufacturing financial statement look like. All right. So we will divide it into basically um, three parts. Okay. So we will divide it into, so the manufacturing account has three parts. Full manufacturing account question. So the format. Okay, so we have three parts. The first part is the manufacturing account. Then the second part is the trading account, which you know how to do from last semester. The third part is the profit and loss account. So the format embodies these entire parts. So let's see how it works so that you will see it. So the format. So the heading is very, very important. One of the things we realize that when you guys are solving questions, you don't put the heading properly. To learn the heading properly. So the heading will be, don't write this heading. I'm just showing you that you must do a heading. So don't go and say heading before you write this one. We are interested in what you write here. So it's manufacturing, trading, profits, and loss account for the year ended. Then you put your date. So the name of the company must come as usual. So if it is a Spencer Consults, put it there. If this is a manufacturer, so you underline it nicely. You underline it nicely. All right. So and learn how to be doing these things because it gives you mark. All right. It gives you mark. Some of you are not able to do the question. Just putting down the heading to also get some marks to becomes a challenge, but it shouldn't be something that you should struggle to do. All right. So let these things come very easy at your pen tip. All right. So once you are able to do this, then if there is a CD sign and if you have to put three zeros there, I'm not saying always put three zeros there. Depending on the question, you have to put three zeros there. If you have to put millions there to know how you do that. All right. So it depends on the question. So you will start the manufacturing aspect, and the manufacturing aspect, you will start with the materials. All right. So the material. So you will start with your direct materials. So let's do it like this. Write nicely. That's what we learned, the cost structure, right? Direct materials. Now, the direct materials, you can underline it nicely and start opening stock. So we know that it is opening stock of direct materials. That's what you are picking. Don't forget what we just did. Don't do anything apart from that. So this is what we are doing. We have picked the direct materials. So we are doing opening stock of direct materials. So opening stock. So since you put the direct material here, we know that the opening stock that you've written here is for materials, not for production trading. So this is specifically raw materials, all right? And the same thing you do in trading, that's what you do. You add purchases. And what purchases is that? These purchases is raw material. So purchases of raw materials. So let me even add opening stock of raw materials. But we know that that is what you are doing up there. So that is that. Opening stock of raw materials. Okay, so you put it there nicely. You add. If there is carriage inwards of raw materials, bring it. Carriage inwards of raw material, bring it. Okay. If there is any return of raw material, return outwards. Because anytime there is a purchase, there can be return outwards. Just as anytime there is a sale, return inwards. There can also be return outwards of what? Raw material. Please remember, it is on about material. So take it out. All right. That is that. Okay. Hardly will you get drawings of raw materials. Drawings, personal drawings, because this is not a sole proprietor. If it is a sole proprietor that is doing the sole manufacturing, there may be drawings of raw material which you will take it out. So let me just bring it in just in case. Normally it doesn't happen, but just in case. Drawings of raw materials. Please also take that one out. All right. Now, when you total everything, what you get here is the raw material available for what? Not for sale. I hope somebody nearly says sale. It's not for sale. It's for use, for production. So raw materials available to use. All right. And what do? You less closing stock, right? Closing stock, which closing stock is that? Closing inventory of raw materials. So you less that one. Once we less this one, we get our direct materials. So we have that. All right. So that is that. That is that. Then what do you do after getting your raw materials? You come to direct labor, don't you? So direct labor. All right. So what are typical examples of direct labor? The labor that is working directly in the production process. They are directly involved in the production process. So what are some of the examples of such? We have the wages, all right? So you have to consider the wages of those who are working on the machines, all right? So the wages. And so here we say that when wages is standing on its own, it means it is direct, okay? When wages is standing on its own. So it becomes a direct cost, all right? So take note of that. Very, very important. All right. Then we move to another one, the direct expenses. But let me get you some additional examples of direct labor so that when it comes, you will be able to know that it is direct labor. So let me get you some. So we have something like the wages of machine operators, but when wages is standing on its own, please make it direct, right? Make wages of machines operators, those guys who are on the machine, who operate the machine. Wages of assembly line workers. You can add, if it is it's like doing carpentry work. The salary of the carpenter in the factory is direct, all right? So that is that. Like a tailor who sews garments, the person sewing, the salary, the wages for that guy is direct, all right? So you can even add overtime wages, all right? So overtime wages of production staff. So those who are actually touching the thing when producing, those are the people we are talking about of production staff. Those are direct, all right? Take note of that. So that is that. So, but in your exams, you may see wages standing on its own. Add all those things. That will sum up to your direct labor. Okay. Then what did we do after direct labor? It was direct expenses, right? What are examples of direct expenses you may get? For your level, the usual one you will get is royalties. So royalties paid per product, all right? So payment for that one, you will have it. But you can also have something like fees towards specialists, external specialists that we probably brought, okay, to do something in the factory for producing the thing. You may have something like rental of special equipment, hiring or rental of special equipment. These are all direct expenses. All right. You can also see in your exams what we call subcontracting cost. When you see all those things, add it. All right. Like license or certification fee, you can add it. Okay. Or power or fuel cost for running specific production machine. Right. Fuel or for when you see like specific machine, you can add it. So you add all these things. All right. And once you add all these things, you have the three. And when you have the three, that becomes your prime cost. I think we've established that. So make sure that you do all these things to get the most mark for your work. All right. So we know that now we have a total, which we call prime cost. So what is left? The indirect aspects, right? So you bring in the indirect aspect. But let me say that when you were learning um, final account last semester, uh, you learn something about accruals and prepayments. Okay, so for example, if you take these wages, all right, that you have, if there is any accrual or prepayment, you have to bring it in. So let's say accrued wages or prepaid wages. what will you do to accrue wages? Accrue wages is an additional expense, right? If you have prepaid, it means it's not for this year. So subtract the prepayment and add the accrual. All right. Make sure you do that. Yeah. So take note of that. All right. So you've gotten your prime cost. So the rest is bring in the overheads, right? Add the overheads. So the overheads, we are talking about factory or production overheads. Choose one and write. Don't write everything. So you have your indirect material. The question will make it specific. All right. That it is indirect material. We have indirect labor. But for the indirect labor, let me give you some examples of it so that when you see it in your uh, um, your exam, you will know that those ones are actually indirect. So we have something like the wages of the supervisor. All right. So supervisor's wages. These are our examples. They don't get in touch with the job. They just look at people doing it. Wages of the cleaners. All right. The maintenance staff. They don't touch production. They just come in when something is wrong. All right. We have the admin people, the administrative staff, like the accountants and all those things. Admin staff. All right. All these are considered as indirect labor costs. So when you see those in your exam, so that's what you are picking. So this is for direct materials. Then what is left is your indirect expenses. Is that not it? Indirect expenses? So any form of indirect expenses, you will add the indirect expenses. And so here to just make sure you understand that if there is any accrual or prepayment, you must know what to do. All right. Okay, so let me add something like general factory expenses. So that is for the indirect. It's the same thing. Okay, so I can just call this one indirect expenses or general factory expenses. All right. You know that the total of this thing is called overhead. But like I said, if there is any accrual or prepayment, accrual or prepaid expense, if it is accrued expense for the factory, what do? You will add it. For prepayment, you take it out. All right. So all this put together will give you your factory overheads. Your factory overheads. All right. So this is your total overheads. It's here. Now, when you add the overheads to the prime cost, what do we say you get? Good. You remember, right? Production cost. Production cost. All right. So usually it should end here. It should end here. So from here, you have your production costs. But sometimes you will see that the people were doing some production, they had not finished some of them. So that introduces you to something we call work in progress. There may be some of the things that they were producing, all right, that they had not finished producing them. Okay, so if they had not finished producing them, we call it a work in progress. work in progress. So when you have such cases of the work in progress, it means that it is also something that has not been finished. It's not finished. If it has been finished, hallelujah. But it hasn't been finished. So it means that that thing is still in the production process. All right. So before we take anything to the trading department, everything. So this is like a departmental account. So we have the manufacturing department, then we have the trading department. So before you carry out everything to the trading department, we must understand that there are instances where they were producing something, and because it's still in the production process, you cannot sell it. You cannot sell those ones. So what we are going to do is that we are going to deal with that aspect. And how do we deal with that aspect of a work in progress? What we do is that we will add all the cost from last year in respect of those work in progress, and we will deduct those from this current year in respect of those work in progress. So what do I mean? So it means that when you get here, you will add work in progress brought down, right? So add work in progress brought down. Another way of calling it is opening, right? Opening WIP, work in progress. So when you have that, you will add to this one. Then you will less. So there's no need for you to write the add and the less. Just know what you are doing. Work in progress, carry down. That is for this year. All right. Or closing WIP. So you take that one out. All right. So that you are having the final figure to actually take it to your trading account. Basically, that is that. All right. So, ladies and gentlemen, this is the structure of the manufacturing part. That's the structure of the manufacturing part. Okay. So this is what you are taking to, you'll be transferring it to the production aspect. All right. So that is that. Now, how is the trading part like? How is the trading part like? So let's look at how the trading part looks like. And it's something you already know. You know it already because you've gone through trading accounts since last semester. So this one is no different from what you've been doing. All right. So let's look at the trading aspect. So if the question asks you to prepare for only the manufacturing aspect, this is where you will do two. You do it and end it here. But if he asks you to do for the entire manufacturing trading profit and loss, just as we are going about it, then it means that you will continue. All right, you will continue. So this is what we are going to do now. Once we have added the work in progress, that is the figure that we'll be transferring to production. All right. Later on, we will do things about the unrealized profit. Okay. So once you get here, that is fine. This is the second part. That is the trading aspect. So all this we are done is the manufacturing aspect. You know how the trading aspect looks like. That is easy. All right. The trading account. That one is easy. So that one, we start with sales, right? Sales of what? So this part is finished goods. but not by force to write the finished goods. But know that it is for finished goods. So that thing you learned in last semester, right? So you less what? Return inwards. Now, return inwards of finished goods. Then you get your net sales, right? You know this. You get your net sales. Then what do? You take away cost of sales, right? So the cost of sales, we have opening stock. What opening stock is this? Not the raw material, but of what? Finished goods. Get the difference. The finished goods. Now, what do you add? You add purchases, right? But here, it is the production that you did that is coming. Because we are not going to buy from an outsider. That is why we produced it ourselves. All right. So you add production cost. Let me change the ink so that you know what figure you are bringing there. That production cost that you have calculated. All right. You add production cost. So here you go. Add production cost. But if the entity bought some extra somewhere, then you add purchases of finished goods. Purchases of finished goods. Maybe they bought some, apart from the one that they produced, they also bought some. Then you add it, all right? And if there is return outwards, or even before the return outwards, let's talk about carriage inwards of finished goods. What they were bringing in, carriage. So the carriage is, know which one is that of finished goods. Know it. Then if there is any return outwards of that finished goods, the purchases they did, you take it out. So now you remember this part, all right, where you will be getting what you have here is what? Cost of goods available for sale, right? Then you less what? Your closing stock. Which closing stock is this? Finished goods, all right? Then you get your gross profit. Sorry, your cost of sales, which you will subtract to get your gross profit. And you remember what we used to do from here? You add other income, right? The same thing. And what were some of the other incomes? I think you remember discounts received, right? Commission received, investment income, gain on disposal. You remember all those things now, right? So you add all of them. Add all of them. Then what do? You less your expenses. So the trading aspect ends here. It ends here. This is where the trading aspect ends. So you have your profits and so other income, then you less your expenses. That's where the profit and loss aspect starts. All right. So that is that. That you less your expenses. All right. So the expenses is categorized. You will be getting administrative expenses, selling and distribution expenses, and there is something I'm coming to show you. You have finance costs or finance charges, issues of depreciation. You know the rest, all right? So you know the rest. So you add all those expenses. And in all these things, remember to add the accruals and subtract what? So add all accrued expenses and less what? Any prepaid expenses. But guess what? You have seen that. So let's say you do this, you get your net profit. All right. And this is something you learned in departmental accounts. You have seen some of these things already, the expenses. You have seen some of them already up there. You have seen some of them. So here, you'll be apportioning them. There are some of them that are for the manufacturing aspect. There are some of them that are for the trading aspect. So you'll be giving grounds to apportion certain expense. All right. So let's say, for example, when we talk about depreciation of the factory building, all right, this depreciation, it is actually an indirect expense. All right. So it is an indirect expense. So it must go there. But you may be giving basis to apportion them. So if they say the factory depreciation is, let's say, 10,000, then they say that the factory is 2 or let's say 20% admin is 80%. Then it means 20% of this figure, which is 2,000, you will take it to indirect overheads or indirect expenses. All right. Then the 80% will be the one that will come here in terms of your trading. So you must learn the apportionment, and that is something we went through during what do we call the departmental account. All right. So the basis of apportionment. All right. The basis of apportionment. So you have to find the part of the thing that belongs to the manufacturing department, the manufacturing side of the account, and also the part of that belongs to the trading. So let's talk about some small basis for apportionment so that when you are doing it, you will know that this is apportioned to this one, this is apportioned to this one, this is apportioned to this one. All right, so some of the expenses and their basis of apportionment. Apart from apportionment, there is something called allocation. When we say allocate it, then it means carry out the whole amount to that part. All right. If you say allocate 10,000 to, let's say, selling and distribution, you just take the whole 10,000 there. All right. So basically, that is that. All right. So something like lightning, ECG. The factory is using ECG. Those in administrative part are also using ECG. So we use the number of lights, the one that you have used, all right, or points, light points. But in this place, it won't be like this. They will just tell you that manufacturing aspects is 60%, then administration, which is in the trading, is 40%. So you just use that one, all right, or 2:2, 2:3, and all those kind of things. So lightning, all right, or lighting, it's actually lighting, not lightning as in tendering. So it's lighting. So we have power. That is a horsepower. But like I said, it will be given to you like manufacturing and the trading. All right. So take note of that. If you take something like depreciation, what will be the basis of apportionment? The value of the assets. All right. The value of the assets. Value of the assets. But once again, like I said, it will tell you that manufacturing is this one is that. Now, like something like rent, all right, where we are using the floor area, but again, you'll be giving manufacturing and the other. All right. So even the carriage in what you saw carriage in what, all right, one for raw material, one for the finished goods. So it can be also given that the finished goods is this percentage. All right. But so according to the department, is departmentalized. So is it the trading department or the manufacturing department? All right. So is that one is not that a big deal for you because the examiner will make it clear as to which one is going to manufacturing and which one is supposed to go to the trading aspect of it. All right. So basically, that is that. Okay. So with that said, let's take some example and actually work at it. We've been here before. All right. So we will take one example quickly and we will look at it. All right. So let's look at this one. In the part 2 of this video. So see you in the part 2 where we take a simple example from this one. Bye-bye.